What's the value of wealth if achieving it comes at the expense of our freedom to choose? Welcome to the episode today where I talk big tech, big government, and big central banks with a very special guest. Before we start, my wife and I recently hit a milestone. I haven't told her about this, of course, yet, but we are about halfway through being prepared for retirement. And it's been about 15 years since we started to take this whole retirement planning thing seriously and started investing with a little bit of purpose. And we have about 15 years to go. If the next 1.5 decades looks similar to the last, I think we're going to be okay. We're going to make it. All we have to do is keep earning, stay in control of our spending, and test our assumptions every now and then. Kind of like what I talked about last week. We've made all the big moves. We've put our money in all the right buckets, and now it really is just all about staying the course. And often I've noticed that people from their mid to late 40s onwards have a similar shift in focus around this halfway mark. And now that I'm here as well and seeing it for myself, I can see this clear. The more skin that you have in the game, the more you take notice of things playing out over the longer time frame. And I think that's why it becomes a little bit easier as you get a bit older, or as you get more into the whole investing thing. It does get a little bit easier to not get distracted too much by the short-term changes. You don't think about U.S. elections and alien disclosure and things like that too much, or you don't worry when you do. But you do start to kind of think about some of the more ethical considerations, and you kind of look at both sides of the coin. Like, if we really did get what we want, would that really be what we want? And let me put it this way. Of course, we all want our investments and our tech companies like Apple, Google, Amazon, and Microsoft to go infinitely higher. Number go up to the moon. But what are we really doing here on the other side of this? Are we actually just voting for the Magnificent Seven, these 7 tech companies, to effectively rule the world? Is that where this eventually goes? Because in order for our investments to grow even higher, they must become more powerful. So at some point, maybe subscription fees become taxation. Move over government, there's a new kid in town. Well, that's where this really ultimately goes. If they keep on growing at the rate that they're growing, they become infinitely powerful. Still, in another area, we have a lot of people that believe that bigger government will solve the bigger problems that we have in the world. Already they struggle to solve their current set of problems, but forget that. What would the world look like, though, with even bigger government and with more and more people thinking that that is the solution? Or what about if you're a property owner or a property investor? We all want property to double every 7 to 10 years when that's our skin in the game. But how is that not a recipe for insane inequality over a long enough time frame? What about gold? Gold is money, but only in a post-apocalyptic world, right? Or Bitcoin. Bitcoin is basically worth infinity. Bring it on. That's what we want. But in that world, the majority of people will actually miss out. So if we're being honest, it seems like this whole investing thing is a real ethical quagmire at times. So what's the value of our wealth if the majority don't own their own homes and see you as the problem? Or what if monopolistic tech companies destroy choice and innovation forever? What about if our ability to spend money is throttled by mission creepers and government and central banks? My guest today is Ananish Chaudhuri. He is a professor in experimental and behavioral economics at the University of Auckland. It's the second time I've had him on the show. It's been like 3 or 4 years, though, since the last time. So he's pretty much going to be new to you today, I guess, if you haven't been listening for that long. But put your hands together if you have them and you're not driving. And let's get into the show. Cheers. You are listening in to the Everyday Investor Podcast, and I'm Darcy Ungaro. Business, shares, crypto, property, precious metals, and managed funds. It's not about the tools, though. It's about the dream and how much risk you're willing to take along the way. I'm aiming for a healthy margin above an average result for myself, my family, and the people I work with. If you're an everyday person, then please join me. The Everyday Investor Podcast thanks past, present, and future partners of the show. Special mention to Ungaro & Co. for financial advice, Gorilla Technologies for strategic IT solutions, and Icehouse Ventures for investment into Kiwi tech startups. Check out the show notes, subscribe to the fortnightly newsletter, say hello on the socials, and leave a 5-star review. But most importantly, remember, this isn't advice. If you need that, reach out to me or contact your current financial advisor for input. Thanks for joining me on this one. Let's make a start. Can you just start off by telling me a little bit? I know you're an author as well. You've written a couple of books, and the latest one you just told me about that's coming out shortly. Why don't you just tell us a little bit about that book?
So the new book that's coming out in January 25 is called Economics, A Global Introduction. So I've been teaching a course called Understanding the Global Economy for a long time. I decided at some point that I was going to start writing this up. And many of the people I teach are engineers and pre-med students and things like that. And I think all of these people would benefit from having some basic idea of economics. And I'll tell you one thing to deviate. During the COVID pandemic, one thing I realized is that a lot of medical professionals don't really understand the concept of trade-offs and opportunity costs. The idea that, look, if we devote all our resources to tackling COVID, then something somewhere else will have to give. And people seem to think that we could put all our resources into tackling COVID and not lose out elsewhere. And this seems a fairly fundamental idea, but it seems to escape a lot of people. And the idea of what's called a constrained optimization, right? That you have finite resources at your disposal. So taking something away from one thing means, giving up something, etc. So that was one. And the other, so I think some basic economics is actually quite useful for pretty much everyone. And the way we write our textbooks makes it very difficult. I mean, if you talk to somebody, it's like rocket science. It's really not. It's very basic common sense. And the other thing that we don't do, especially, for many of these kids who will never do any economics again, is we don't tell them about contemporary issues. For instance, why do we need to regulate big tech, for instance? Do we need to regulate big tech? Why? Cryptocurrencies, digital cash, central bank digital currencies. We teach students that trade is highly beneficial. But then why is trade so controversial? What are the so-called distributional aspects of trade inside countries that make trade controversial? What about fast fashion? Is this really modern slavery, or are there beneficial aspects to it? Right? Climate change, what are potential approaches? What should we be doing? What is a better approach than others, and things along those lines? So I try to bring in a lot of these contemporary policy debates, because even in introductory courses, you can actually tell students interesting things around these lines. So that was the reason for writing this book. And one other thing was that a lot of the textbook we use are all written by US authors. And so they're very heavily biased towards the US perspective. And I tried to bring in kind of a more East Asian, Oceania perspective, New Zealand, Australia, China, what are the issues and things like that. I consider myself very much a centrist in some senses. So I'm somebody who thinks that free markets are great, they're wonderful, capitalism is great, except there are areas where things don't quite go well. For instance, climate change is an issue, or, what about public goods? How we provide schools and hospitals and national defense. These are areas where markets need some amount of government control. But I actually say this in the book. I actually start by saying that, look, there's no politics without economics, and there's no economics without politics in some senses. So I kind say that, and I'm a big believer in free markets. Millions of people have used free markets to come out of poverty. But a lot of people seem to think that, these kind of monopolistic power is a feature of the system. It's really not. It's more of a bug. But a lot of people kind of on the left of the spectrum seem highly suspicious of free markets. But free markets are really wonderful things, right? Because free markets are the best way of aggregating information spread amongst many people. No central authority can ever do what free markets do, actually, by sending signals about shortages and surpluses. Sometimes things don't go well, but that's kind of that's a bug.
Yeah.
Sorry.
No, that's great, and I think that leads on really well to where I'd like to go. Really, I think when we're thinking about our investing behavior and our strategy, we're trying to imagine what the future looks like, right? And I know that if you were to understand what just the pure free market is saying today, you could draw some fairly logical, common sense conclusions about how the world works, but also where the world is going. And where it gets a little bit more complicated is when you have intervention, when you have authorities that inject some sort of fiscal or monetary policy into the equation, then it becomes really hard because you have to anticipate what people are likely to do. And it goes even further because you kind of have to anticipate what drives that intervention and what some of those factors are. So it becomes really hard to build a model, doesn't it? Just to predict, I guess, what future outcomes will be. Is that one of the big challenges, I guess, that you have in the area of economics, is just understanding the relationship between the free market and the planned economy?
Certainly, but as I said just now, I think the case for free markets is very clear, because if the whole point about prices is that you aggregate information from different sectors, and it's when you allow individuals to do their own thing and aggregate that's a much better way of doing it than having some kind of central authority plan things. Even though I think this attraction of a central authority kind of still persists, but I think that myth has been shattered in some senses. It's not possible. I mean, it's only when you allow different people to go about their own lives that you get the best option in some senses, with some restrictions, and we can talk about that. But going back to your point, though, so this is, I think, more a question of, in my another book called Behavioral Economics Experiments, I talk about this idea of what I call system 1 versus system 2 thinking, right? So common sense. So common sense is often, at least a common sense, or a very, very common phrase is gut feelings, right? So we often say, ask, what does your gut say? What do you think in your gut, etc., right? One problem is that this kind of thinking is very automatic, and it serves us well often, but it doesn't serve us well in some instances, right? Because some problems are quite complex. And if you apply your gut instincts, you could go wrong in the sense. So when it comes to financial decisions, for instance, we are often quite influenced by what's happening right now. Whereas often it's useful to take a step back and engage in what's called system 2 or deliberative thinking. That will the conditions today persist in the future? Will it get better? Will it get worse? For instance, in terms of investment, when we look at kind of people deciding to invest, we often take a very myopic view of what's happening now. What is my income now? What is my earning potential now? Without necessarily allowing for the fact that your earning potential will probably increase over time, right? Similarly, whether to pay off your mortgage, if you have some money, should you pay off your mortgage now, or can you invest it, and will that make it a better option in the long run? Some of these problems are quite complex. On one hand, it is, I think, useful to try and acquire some expertise, or at the very least, kind of sit down and think through some of these problems, right? And it's also, I think, useful to get advice from different people. Now the problem with advice, which is something I've worked on, is that you can make an error there, in the sense, if you talk to the same type of person or the same type of people and you get the same advice, then you can actually go seriously astray, in the sense that, everybody's buying a house, so I should buy a house, or everybody's buying cryptocurrency, I should buy cryptocurrency. So when you seek advice, I think it's important to seek advice from different kinds of people. That what are the potential downsides to doing this, right? Because we often, it's very common, right? Through confirmation bias, we decide to do something and then we only look for evidence that supports that perspective. And we heavily discount evidence that goes the other way.
If we were assessing risk, though, that's exactly what we ought to do. We would
Correct.
look at the pros and cons, the reasons why our investment thesis is sound, and then
Correct.
what are the
Correct.
reasons why maybe our assumptions that we've built that thesis on might be a little bit shaky. And I think ultimately, though, like especially when and this is kind of like the big idea that I've been thinking about lately, is that when you don't really have much to lose, like when you don't have much, when you're just starting out, you don't really have the option of throwing a lot of capital around. You don't have a lot of wealth already. So you kind of have to be a bit clever. You have to use leverage. You have to figure out how to get into a position where you can get a mortgage. And then you have to think about some views about the future that might not be, I guess, accurately priced. You have to kind of take a bet on the future and then position yourself accordingly. But to do so, you really, like you say, you can't fall into the traps of confirmation bias where you only listen to the things that support your pre-existing belief set. You have to challenge yourself. And really, that's the only way, I guess, you're going to see the world for what it is, not how you want it to be. And I come across this, like with property investment, there's this term, I guess you could use it, called hyper-Bitcoinization, climate change investing. These are all like schools of thought, I guess, or assumptions that come with a whole paradigm. And if any element of it is not true, then your whole investment thesis kind of falls down. But going back to what you were saying around do you call it what, type 1 and type 2? Is that what you called it?
I said system 1 and system 2. You can call it yes. So that is that some of our thinking is automatic. Right? We see something and say, okay, here's what's happening. And then sometimes you need what's called deliberative. So kind of taking a step back. So in my book, I talk about, our brain has two parts. So think about one part as the elephant, right? So let's say, interest rates are going down, house prices are going to go up. This is the right time to buy. Let's buy something, right? Fine. But, right? Maybe it's entirely possible. But then you have this other part, kind of the deliberative part of your brain, which is kind of the rider, which tries to reel the elephant around, right? Which is possible, but not very easy because the elephant goes down that path. And what happens is, I think in a variety of cases, we get too swayed by current news reports. And this is, I think currently, to be honest with you, you should probably consider buying. Given that interest rates are going to drop, prices will increase. But what I'm saying is, in doing that, especially if you don't have a lot of expertise in that area, it is worth getting a second opinion. I don't necessarily have to pay for it. Just something that kind of slows you down before you take the jump.
Yeah. What you're basically saying is test your assumptions. Right, test your assumptions before you load it up with capital. Test it. Will actually hold weight? And the property thing is a massive one lately, because I think what we learned from March 2020 onwards, especially, is that when central banks reduce interest rates, prices go out of control in all markets. And so when we see that same pattern, especially when it wasn't that long ago, we're already primed to think, hey, now is the time to jump in. And I think with property in particular, there is a case for a significant bull run to occur, but there's also an increasing chance that the opposite could occur at some stage due to basically losing control of the inflation battle again. But often that risk isn't highlighted because there's no real commercial incentive to discuss risks around these concentrated strategies. And I find that quite fascinating, because that is actually the most important thing, is to retain the capital that you have, not just gamble with what you have to get more. It seems crazy, but often the commercial incentives don't work like that. You don't get the clicks, you don't get the views if you're talking about the risks.
Let me just say one more thing, and I mean this kind of sincerely, which is that when you read the newspapers, you will often read things like, economic expert says this, economic expert says that, right? But very often the economic experts work for banks or similar. And therefore, in listening to them, I'm not saying don't listen to them. I'm saying in listening to them, you need to bear in mind that they may have incentive to say certain things, or they may say certain things that's true from their perspective. but that doesn't necessarily mean it'll be true for you. Sometimes it's worth asking, what background or what context is this person coming from when somebody says, oh, we should do this, we should raise interest rates, or we should lower interest rates, we should cut interest rates more. Fine, all of that is true. But what I'm saying is that sometimes people in a particular sector have a very particular viewpoint. So it matters to what extent they're completely neutral, I think.
If someone really is going to get a financial reward by getting you to adopt their view, then that should be transparent, which makes sense, right? Like you should understand that there are motivations here that are kind of governing or setting a framework for that advice delivery. But also in the same context, you have marketing programs, and you'll have podcasts, you'll have brands and products, financial products that are manufactured to exploit that paranoia that somebody is out there to take advantage of me and charge me a higher fee without delivering value. So buy our product instead. And I find that fascinating, because that is actually using the exact same technique, but it's just on the other side of it. And when we're making investment decisions and we're trying to weigh up the risks and the benefits, how do people actually filter through the noise to actually get the pure signal when they're making investment decisions?
It's difficult. I don't have a good answer to that. It is very difficult, because some of these are quite complex, things. I mean, think about, net present value calculation. They're not really easy, right? So when you're projecting 10, 15 years in the future, these problems get quite complex quite quickly. I keep using this phrase called the devil's advocate, that what are the drawbacks to doing this, especially when it comes to large sums of money.
And what I'm hearing is that surround yourself with diverse views. Keep it open.
Surround yourself diverse. That's right.
Yeah. Okay. So again, following this theme really of, I guess that you could probably call it confirmation bias, or even recency bias. In the last 3 to 4 years, we've seen that if you really want to do well, apart from property, then investing in tech companies, well, that makes sense. So we now have the magnificent seven tech companies that seem to carry the weight of the entire S&P 500 in terms of being responsible for the performance. And we see how AI, artificial intelligence technology, has infused these tech companies to go even higher and even faster. And it almost feels like the sky is the limit, and we are going to be entering into this new techno-utopian world where everything becomes infinitely cheaper because the only input is carbon and electricity, and you can print your way to prosperity. I'm concerned in that maybe at some stage it's not going to be all that, and people will be disappointed with their strategy investing in tech. But I'm also curious as to what that future world does look like. Does it really represent an age of abundance or not, right? Like, are we over or are we underestimating the future of technology? What do you think?
There are a number of parts to this, right? So, should you be investing in tech companies? Yes, most likely. The returns are high. But is the evolution of tech companies good for us in the long run? Probably not. And the reason I say that, and I'll come back to this in terms of AI, or maybe I should say the AI part first, right? AI will most likely increase inequality. AI will lead to some amount of job destruction. It will replace some types of jobs. And it's not exactly clear to what extent it will radically increase productivity. So on the whole, the impact of AI may actually be negative. More importantly, even if it's not, you think about for a minute about human agency, right? I mean, so AIs can most likely duplicate ideas or duplicate activities. But who's going to create the new ideas or new activities? It's not clear if AI can do that. At some level, if you think about, let's say, investing money and getting a return on it may be great. But on the other hand, if the net effect on employment and wages is to lower them, then maybe this is not such a good idea after all. Right? The other thing that is happening, I think, is with these tech companies, they have become huge, right? And there are arguments here. On the one hand, when governments, I think the way the US government sued Google or they've sued Apple, they are saying that these tech companies are engaging in anti-competitive practices, in the sense that faced with competition, they're buying out, like Meta bought out Instagram. Google has bought a number of smaller companies that proved a threat to them. So they're actively engaging in anti-competitive activities to drive out competition. What is the tech companies' response to this? The tech companies are saying that, well, no, you know what, this is mostly due to something called network externalities. What does that mean? Well, that simply means that, look, why do we post on Instagram? Because other people look there. And why do we look there? Because other people post there. As more and more people do this, the size of the company grows. So one of the arguments made by Google is that Google is very good because it's very big. And because it's very big, it can crawl the internet much more quickly. But as a result, what's happening is these companies are evolving to become giant monopolies. And the evidence is that they do engage in anti-competitive practices. This is actually detrimental to small businesses or small entrepreneurs, because they're going to find harder and harder to compete against these barriers thrown up by the existing companies. Because it's very difficult. I mean, if you look at Google, Google controls about 88% of in English-speaking countries. Bing has about 10% and DuckDuckGo has about 2%. There were other people who tried. Amazon tried to start something but couldn't do it. So if Amazon cannot do it, then it's much more difficult for a small investor, right? To going back to my previous point then, it is a little bit of a problem when markets get monopolized to this extent. It's probably not good for individuals if markets are dominated by such gigantic monopolies. For instance, in the case against Apple, if you have an Apple Watch, you need an Apple phone. But there is no good reason why smartwatches shouldn't work with any smartphone. But once you're in the Apple world, Apple's primary aim is to increase the stickiness of its ecosystem. So now you have, Apple CarPlay and iCloud and things like that. There are a lot of super apps that are cloud-based. So what's a super app? A super app basically allows you to do a whole bunch of things within the same app. So the easy example to think of is Netflix. So you put on Netflix, where you get access to shows by ABC, NBC, CBS, etc. There is no obvious... So once you have these super apps, people can access these. They could be games and payment options and things like that. And the phone itself becomes less important. So Apple actively prevents the development of these super apps, because then the phone becomes secondary. And Apple does charge huge margins on its phones. But once you are in the Apple world, it then becomes very difficult to go out, because you're so used. Your iMac is talking to your iPad, is talking to your iPhone, etc., etc. And that's a key argument that Apple makes. They say that, look how great these things are. And if we didn't make it sticky, then things would go to hell. Now the question is, will it or not? But if you remember, or if you recall, a large part of Apple's success is based on doing the exact opposite of what Apple does today. For instance, Apple's success owes to a large extent to the US government's case against Microsoft back in the 2000s. And what that did was, when they got a consent decree from Microsoft, which forced Microsoft to open up Windows to iTunes, that in turn led to the iPod, which was the originator for the iPhone. So today, the people who criticize Apple say the exact same complaints against Apple that Apple made against Microsoft 25 years ago.
So where does this all go then? Like if things just get better and better in this walled community, if you like, because they just keep on delivering things that surprise and delight their users, eventually our whole world now is run by Apple in an extreme situation here, and innovation gets crowded out, right? Is that the main risk?
That's a huge risk, yes. It's a huge risk. And also, I mean, in some senses, these companies now are almost as powerful as governments, maybe more powerful than governments, but no one really elected them. So to what extent that's good for human well-being is questionable. I personally think it's not that great, and I kind of support these cases. So in the Google case, which has already been kind of litigated, the judge said Google is guilty of being a monopoly, and now we have to wait and see what ends up happening. I don't anticipate much happening. I see, similar to the Microsoft case back in 2000, something like a consent decree that will kind of make changes at the margin. But who knows?
Right. And really, it's kind of just dividing up the spoils amongst, say, the Magnificent Seven, right? Like they really are just competing amongst each other until eventually.
Correct. Exactly. It's not as if it's not, because the entry costs are now so huge given the size of these companies. It's not very easy for new people to enter. I think in the long run, this is not good for us. Just as giant monopolies usually aren't good over time.
Yeah. And so
it's just to give you an example, Apple doesn't spend much on research and innovation anymore. Right? Apple spends 70% of its revenue on stock buybacks and dividends. In fact, I mean, in the case, the US government has, emails and things saying, we don't need to make improvements year on year. We need to we should say this is good enough and not go beyond that. Whereas new people entering would say, okay, let's go beyond this. Why shouldn't we innovate? So these monopolies are significantly detrimental to innovation. Now, if you're a shareholder of these companies, then you're probably better off. But if you are not, or even if you're a shareholder, in the long run, it's not clear.
Well, that's the thing, right? Like, because that's what ideally you are investing for the long run. But
correct.
On one hand, and how's this for cognitive dissonance, right? Like on one hand, you want them to be masters and commanders of the entire universe. You want them to dominate because you want your net worth to go up. But on the other end, you're also a consumer, and you don't really want to be put in some sort of digital prison because, hey, that isn't going to function. That bit of software isn't going to function with the operating system that you've selected to download, right? So, like that's the problem that we have as investors, right? Is that sometimes we are competing against our own best interests, aren't we?
Yes, because as these companies grow larger, they could present a threat to your very livelihood at times.
Yeah. If these tech companies get so large that they can exert influence, inevitably it starts to be exerted in the financial realm. And that's when you have a form of global currencies that could be created, which is one of the reasons why central banks of each nations have been, well, they've noticed that risk of their monetary authority being challenged from these tech companies. And I think that is a story, like that is a data point that we could look at just to support that case that we made before, that, hey, if tech companies just get bigger and bigger and bigger, then they could actually end up taking the position of nation states in terms of governments, in terms of their influence in our lives. So that's why I think this whole topic of central bank issued digital currencies is quite fascinating, because in a sense, the way I'm framing this would be interesting to hear your thoughts on this. It feels like it's a defense mechanism from central banks against technology companies from invading their territory. I don't know if you would agree with that, but at an entry point, would you say that there's some logic in that?
I think there is a lot. Yes, I think you're right. So on the one hand, I have to say that cryptocurrencies have been around for quite a while now, but they haven't had as much of an impact as you would think. I think El Salvador is the only country that adopted crypto as its currency. Most countries have it. But
Bitcoin.
But I think you are right in the sense that the drive towards digital cash is a response to the crypto threat. So on the one hand, governments or central banks will say, "Oh, this is digital cash is about financial inclusion and things along those lines." A case has been made in particularly in less developed countries that this is a way of reaching people who don't necessarily have access to commercial banks. But I think to some extent it is about the threat of cryptocurrency and losing control over monetary policy in some sense, right? So we have now gotten two very different views. So cryptocurrency at one level is completely decentralized, right? So it kind of puts the power in the hands of small players, even that's not actually true. Turns out that in the crypto world, there are a few very big players. And the other issue is that I think a lot of people, when they think of cryptocurrencies, they think of, somebody sitting in the basement with a laptop. But that's not how it is to mine bitcoins, for instance. You need literally a huge array of computers grinding away. These things are very noisy. They create a lot of heat. So crypto is not as decentralized or as little person friendly as many people think. You need enormous resources. Anyway, but theoretically, I think this Satoshi Nakamoto wanted this to be something that the individual person could need. And then you have digital cash, which kind of centralizes power in the hands of the central bank. And it's not clear to what extent this digital cash is also a good idea. For one thing, as I pointed out in a recent article, this will make the central banks even more powerful, right? So both crypto and digital cash are kind of designed to minimize the role of commercial banks, which is fine. Commercial banks make enormous amounts of profits, so minimizing their role may be good. Right? But if it comes at the expense of a massively powerful Reserve Bank of New Zealand, first of all, as we say, you have a giant monopoly. And second, these huge central authorities don't really process information as well as decentralized people do. Right? So you mentioned this, that faced with the COVID pandemic, we shut down the economy and we printed money, which led to enormous amount of inflation.
Yeah.
I think most people would agree that the interest rate cuts we have had from the RBNZ should have happened much earlier. So it is not clear that a giant monopoly central bank will deliver better results from us. I personally think that allowing commercial banks and then maybe regulating them to some extent, using our existing antitrust laws, with a much better idea than trying to completely replace commercial banks. So I'm not a big fan of digital cash because, as I said, I mean, if you talk to these people, they're not saying that this is designed as a counter to cryptocurrency. But if they're not, then what problem is it that they're trying to solve really with digital cash? Because this would probably require the government having access to enormous amount of data on private individuals. Now, both in China and India, you know this, right? That a lot of this is done via a series of biometrics. So they have access to your fingerprints, eye scans, and things like this, right? What that also means is that if you want, you can turn off people's access to this digital cash. If you think, oh, this person's criticized the government, you can turn. Right now, you can still freeze their bank accounts, but they have to go to a commercial bank, put pressure on them. The other issue, and RBNZ says we will not do that, is that these digital cash can be programmed. So realistically, it is possible that the government could say, you know what, will pay you something in digital cash, but that digital cash cannot be used to, say, buy alcohol or tobacco. Singapore has toyed with the idea of putting expiration dates on your digital cash. So you have to spend your cash within a certain date. What's the advantage? The advantage is if you're in a recession and you want people to spend money, then you can use that. But it is a significant violation of civil rights that the government is telling me when I have to spend my money and how I can spend my money.
It's like it really is a variation of what we kind of started with, I guess, where there's two sides to the coin around this one. Like,
Right.
I know, like when I kind of look at this, I see this is going to be a phenomenal, or there will be phenomenal opportunities moving to some form of CBDC, and that there's going to be a migration of analog wealth into the digital ecosystem, and that phase transition of wealth will create massive opportunities. But then, and this is one of your quotes here. In your opinion, it might spawn a giant monopoly with little oversight and potential for abuse. So I can kind of see both of those sides to the coin, and yeah, like there's views that are very staunch on either side. It's hard to assess the risk here, though, isn't it? Like, I would be probably acting in the same way if I was the central bank of a country. I would want to ensure that I was relevant in the future. And if it looked like I would become irrelevant, I would double down to become relevant. And that kind of feels like that's what's going on, right? And they're asking for like a lethal AK-47 machine gun, saying they're just going to use it occasionally for a little bit of possum control.
Yeah, the potential for abuse, I think, is there. You may recall that, when these truckers started complaining against COVID restrictions in Canada, Justin Trudeau's government actually froze their bank accounts. If you have digital cash, that becomes a lot easier, right? Now, without saying who is right, without who is wrong, do you really want to give our governments that kind of control over our day-to-day lives? And I'm skeptical.
Is it inevitable, though?
I think it will depend. I think if you look at the U.S. elections, for instance, I dislike Donald Trump as much as many others, but I think that people are kind of ignoring the fact that a lot of the debates around these kinds of questions, big government versus small government, and the role of government, how much control do we have governments to have now? And that's happening in many countries.
Yeah.
So on the one hand, the governments, like the US government, has been very active in trying to break up these large tech monopolies. But at the same time, their own central banks are trying to become large monopolies in their own rights. And that's a bit strange to me.
Yeah.
Because that's what it is, right? I mean, if you have digital cash, the central banks will have enormous amount of control over every aspect of the economy. Now, again, sometimes that may be good. So right now, what happens in New Zealand? So the Reserve Bank cuts the official cash rate, the OCR, hoping that commercial banks will follow suit. Commercial banks often do follow suit, but we have had cases, and I recall this a few years ago, where commercial banks didn't follow suit, and then the finance minister said, why aren't you lowering your retail interest rates? The commercial bank said, oh, well, in the OCR isn't that important because we do a lot of our borrowing in overseas markets and the margins are still very high, and things along those lines, right? But if you're digital cash, then you don't have to get into this. You might be able to control interest rates much more easily. Again, there'll be times when this will be good. But I'm sort of philosophically a bit skeptical about giving this much control to our governments.
So there's skirmishes that we can have around the edges, but ultimately there's probably a broader war going on between centralization and decentralization, that's like a theme for forever, right? And it's hard to know how things will go this time around, but it kind of feels like, that's why I asked the question, is it inevitable? Because it kind of feels like, in a lot of senses, the trend is, in a way, is monopoly. It's monopolistic. We talked about that with the tech companies, even with governments forming alliances like the BRICS nations, now the East and the West, a little bit more pronounced. So maybe it's inevitable that we're going to see that anyway.
And really, I mean, a lot of the monopolization has been made possible by the advances in tech. Right. I mean, all these talk about, distributed ledgers and digital cash, all of this has been made possible by huge advances in the technology behind these things. So it is possible that the culmination of this is monopolies, large corporate monopolies and large government monopolies. I may be wrong, but as I started out by saying, I think in terms of our well-being, things work well when we have markets that are more competitive, right? Where no one has huge amounts of market power. And these things go against that. And traditionally, I think this kind of centralization has not been great for the average person.
Wow. Yeah, I agree. Okay. Well, so on the 5th of November now, if we have two special events, we have Guy Fawkes Day, and then we have U.S. elections.
Correct.
Not sure how they link together, but in some really weird way, maybe they do. What do you think? Like, do you think that, number one, like, do you think that it's possible that a president, regardless of who it is, can actually turn the tide on some of these global events that we're looking at? And then the reason why I'm asking this question is just that I know a lot of people who are investing look to the election as a really significant event, and possibly that in and of itself, that belief is what will cause volatility rather than the actual impact that one president versus the other will have. How significant is it, this whole election, do you think?
Well, it's probably quite significant. But in terms of geopolitical factors, I think going forward, clearly China's rise is a major factor for us, right? So regardless of who becomes president of the United States, we will probably have to worry about, and as I think you mentioned this, right? So our kind of political stance is very much Western, right? Australia, New Zealand, United States, UK. But our biggest trading partner is China. And there are, I think, both risks and opportunities here. On the one hand, if you have an open trade war between US and China, that would be significantly volatile for markets. But it might also divert some trade to us. So we may not be a complete loser in that equation, I think. If it increases our trading relations, particularly, let's say, if we increase our trading relations with China and India to gigantic markets, if you get a free trade deal with India as a result of this trade war, that may not be such a bad thing. The question there, I think, would be balancing this kind of this security mechanism with the Western countries and thriving trade with India and China. That would take some balancing act, I think.
It's a real dilemma, isn't it? It's like you have to leave your house to go to work, but let's just say you have the inability to lock your door. So if you want to go and get trade, you open yourself up to a risk that you're going to get robbed, right? Like it's kind of like that sort of dilemma that you have, that you're only in one place at one time, and this whole tension between security and trade, that's kind of playing out right now. Do you think it's possible that New Zealand might actually benefit by aligning more of its trade with, say, the US, Australia, Canada, UK? Or do you think that, hey, that's probably maxed out due to geographical restrictions and we kind of have to align ourselves with our trading partner?
The prospects of increasing our trade dramatically with Western countries is limited, particularly because of the things that we export. We are still primarily a primary product exporter: milk, dairy, meat, lumber, etc. The prospects of massive expansion for those goods in Western markets is limited, but the prospect for massive expansion for those goods in say, East and Southeast Asia is huge. Simply because these are gigantic populations, and these populations are gradually moving from, say, a less developed economy to middle income countries, right? So you have huge middle classes in China, India, or even, say, Malaysia, Indonesia, Bangladesh, Philippines, who will now start to demand things like, let's say, yogurts, milk products. So the scope for expanding our trade in those markets is massive, right? Where the population is growing and the middle class is growing massively. So we would be well served to increase our trade in those areas. But as you pointed out, what are the implications for security?
It's good that we're developing a market, but also is there an increasing rise of sanctions against us as Kiwis as well, right?
Correct.
Yeah. No easy answer, is there?
Yes, that's right.
No, that's nuts. But yeah, no. So like if we think about the U.S. elections and we think about some of the shifts that have happened with workers and the general skill level, how does that further complicate things in terms of like economic growth and therefore, I guess, ultimately our portfolios?
So one of the major fault lines in the US is that with the rise of these tech companies, the demand for so-called white-collar workers has increased massively, right? Whereas the demand for blue-collar workers or blue-collar jobs in manufacturing has completely disappeared, right? So you've had a massive increase in inequality between the top white-collar workers and kind of the middle, what used to be kind of the middle class of blue-collar workers. And that's one of the major fault lines in this election and for the past few years. So a lot of the jobs have gone, and at the same time, the evidence suggests that the increasing use of AI, or what you might think of as robots, has also led to a significant amount of job displacement in kind of manual work. The collective effect of this has been an increased inequality. So with the opening up of trade with, China, India, the Western countries, etc., there are huge numbers of people in developing countries, like Bangladesh, for instance, that have made massive improvements in terms of their living standards. So there are millions of people who are better off. And then you have the tech-type workers, people who kind of specialize in things like Dropbox and, Google Drives and all these things, Netflix, streaming things. Those people have been massively better off. But the people kind of in the middle, especially in Western countries, people who are doing the manufacturing type jobs have lost out massively. And that is a major fault line. That's where, in fact, I've written columns on this. So that's where a lot of Trump's support comes from. See, then a funny thing happened. What happened was sort of people who tend to be liberal, you would think would be in favor of these people who are protesting, the blue-collar workers. But by and large, many liberals or, the Democratic Party, etc., we didn't have a good answer to what to do about this. And one reason is that labor is not that mobile. Capital can move between countries easily, but labor cannot, right? I mean, if I lose my job in Michigan, and even if there are jobs in Texas, it's not easy for me to move there. Schools, church, community, family, the need to retrain. I may be 55 years old, I've lost a job. So these communities just got hit by a sledgehammer. But it also turned out that these communities were also the ones who were typically more God-fearing. They were more religious. They were typically more conservative. Typically, these are people who with higher gun ownership. So at this point, what the liberals kind of did was they kind of did a switch, in the sense they made this into a cultural warfare, whereas this was really essentially an issue of a class warfare. right? This was between blue-collar and white-collar workers. But because people on the left didn't really have a good answer to this problem, they then switched it by saying, oh, look, these people are, they're homophobic, they're transphobic, they're misogynistic. Sure, some of them are. But in the last election, Donald Trump received 74 million votes. I lived in the United States I studied there, I worked there for 12 years. I don't think 74 million Americans are all homophobic and transphobic. But because these people were protesting kind of the existing status quo, we had to kind of say, what's wrong with them? So then we turned to this. I think this is a major issue, and this issue will continue to haunt the United States at least. Partly also because one of the reasons why this doesn't become a huge issue in, say, other countries, and it is an issue in countries like UK at this point, but maybe Germany or France or etc., is that these guys have better social welfare systems that kind of addresses some of these things. But if you look at the United States, your insurance is still employer provided. So you lose your job, you lose your insurance. Wow. You lose your job, you lose your health insurance. Then you find another job, you go to the next insurer, and they say, oh, we won't cover X, Y, Z because these are all pre-existing conditions. So the United States has very little in the way of a support system for many of these people. So many of them are really kind of upset at this new tech-driven world, which has it's generated wealth, but it's very, very unequal in its distribution.
That's an interesting way to kind of come full circle to what we started with as well. So in a sense, there's a rising group of people that might literally want to bite the hand that feeds the other group. And what we're seeing play out maybe in the United States is maybe that's inevitable in some other countries where there's that rising gap between the haves and the have-nots. Because that is absolutely one of the big macro themes that I see coming up, is that just because of how the cost of fiat currency being devalued constantly over time, that creates inequality as well. So
correct.
As you're investing, I think that's the thing, right? Like I know a lot of investment, like property investors, will be worried in the future about how they'll be perceived from an ethical point of view. But I wonder if that extends into people that invest in tech companies as well, because you're investing in the very company that's destroyed our communities. True. Do you think that that's a possibility?
Not right now, but eventually, possibly. We'll have to wait and see how some of this plays out.
Yeah.
Right.
Fascinating. Investing in an open mind really is probably the best strategy. Okay. No, that's awesome. I really appreciate your time again.
No, thank you.
Yeah.
Thank you for letting me go on and on.
Oh, no, that was just awesome. I really appreciate that. And if people want to follow you, where can they go to follow you? Where's the best platform for them to follow you on?
So I have a website called ananishchaudhuri.com. They can just search with my name. I have a website that has information about my research, but also about my books and where they're available, what they do, what they talk about. So.
Yeah. No, that's fantastic. Keep on doing the good work, right? Like we need more voices just like yours. So really, really well.
Thank you. You too. Thank you. Thanks, Darcy. Thank you very much.
Thank you. Thanks for joining me today on the Everyday Investor Podcast. I hope you enjoyed that. And if you did, please share me around. For the odd giveaway, invite, and sneak peek, make sure that you've subscribed to the fortnightly newsletter. The link is in the show notes, as well as special referral codes from previous guests on the show. Remember, our show partners Ungaro & Co., Gorilla Technologies, and Icehouse Ventures. Lastly, a final reminder. Please remember this isn't financial advice. If you need that, reach out to me or your current financial advisor. Thanks again for joining me on this one, and we'll catch you next week.
this morning with the sun in my eyes, thinking about the dollars and the freedom in disguise. I've been working hard all of my life, but what's the price of wealth when it cuts like a knife? Oh, the dollar dream, the freedom stream, can't you see it's just a country theme? My Dodge 1500 and my heart strong, sing about the choices I've been pondering all along. With my old guitar and my cowboy hat, I'm sitting by the fire where the cattle once sat, dreaming of a life where freedom's the key. But these bills in my pocket, they're calling to me. Oh, the dollar dream, the freedom stream, can't you see it's just a country theme? My Dodge 1500 and my heart strong, sing about the choices I've been pondering all along. There's a days between the green and the wide open sky, where the heart of a man has to decide and try. For freedom's a song played on an old steel guitar, but money, oh money, it's the North Star. I've seen the neon lights of the city night, but I keep on dreaming of my old farm site, where the wealth is the land, the freedom's the breeze, and the choices we make there as easy as you please. Oh, the dollar dream, the freedom stream, can't you see it's just a country theme? My Dodge 1500 and my heart strong, sing about the choices I've been pondering all along. So here's to the land and the life we choose, where the wealth is measured by the freedom we use. In this country heart, where the songs are sung, I'll keep on strong until my days are done.